Hey guys, Matthew here. Today we're going to be talking about Michael Burry, what he's doing with his portfolio, his massive bet against the AI boom here. He's calling the top. He seems like he has been calling every single last 30 recessions out of the only maybe two that we've had. So this guy who has nailed the 2008 housing crisis via his Scion fund is now targeting the hype and AI stocks. He's actually betting against them. Why? What's his thesis? And what does this really mean for you and me? Let's break that down today in this video. So make sure that you guys subscribe to this if you want to see more content like this. So who is Michael Burry? Michael Burry is a hedge fund manager who rose to fame by forecasting the US housing bubble and profiting enormously from this shorting of subprime mortgages. He founded his original firm, Scion Capital, and that later reopened his hedge fund under the name Scion Asset Management. Now, he's known for being a contrarian, or really just going against the crowd when he sees a capital market distortion. He really wants to make these extremely large bets throughout his career, and he has been continuing to make those extremely large bets, and we will get into that right now. So some of the biggest buys from his latest 13F is actually a huge put position in Palantir and a huge put position in NVIDIA. These are two of the biggest, if not the biggest, names in the AI space today. 66% of Palantir is of his portfolio. He has about 13.5% of NVIDIA in his portfolio as well, and these together make up 80% of his current day portfolio. Other than that, he has calls on a health company like Pfizer and another call on Halliburton company, and these are smaller positions, but the main bulk of his bet is really just against AI. He's saying NVIDIA has topped. He's probably saying that Palantir has topped, where he's placing a lot of his bets, a lot of his capital into betting against the stock, hoping the stock goes down so he can make a large profit. But what has NVIDIA really done in the past year or year to date? It is up 45%. And if you look at Palantir year to date is up 148%. So these are two names that have risen very quickly, very fast, and Michael Burry thinks that this is the top. This is not going to ride any higher, and because if he did, he would probably own the shares or own calls, but he's doing the exact opposite by buying put options here. And if we look in terms of just the value, Palantir alone is already $900 million. It's almost $1 billion here. He's placing $187 million on NVIDIA here for a total combined put bearish option here of $1 billion total. He is betting big. He is betting the farm on hoping that these two AI names will fall down. Actually, he's actually pretty much called it, where this 13 filing just came out and the stocks have dropped, but it seems that they've recovered in the past day. So we actually don't know whether he took profits in one day or if he's still holding these exact put options. He could have made a bunch of money in the past couple of days and sold out. You never know. In the next couple of quarters, we'll be able to see if he actually did sell, right? We can see that the top sells in the 13F were actually United Healthcare, Regeneron, Lulu calls. He sold out of all these positions, and it seems that he may have sold out recently, but we actually are unable to verify that at this current moment in time. So what is his thesis and why is he shorting AI? Well, Burry is always going against many companies that, the companies are getting cheered on by the entire stock market. And there is a valuation bubble risk that he might be seeing. Burry believes that many AI stocks are priced for perfection, and that leaves a lot of margin for error. There is less margin of safety if you were to buy these stocks. For example, Palantir, if you look at where they're trading at just today, their price to earnings ratio is at 435. Their price to sales is 115. It is an expensive company to say the least. And if you look at NVIDIA, I actually don't think NVIDIA is that widely overvalued, where you're getting a PE of 55 and a price to sales of 28. But realistically, this company is growing hand over fist revenues at 71% year over year. You don't get a company like this trading at this low evaluation all of the time. Given that it's the number one company in the entire stock market, then you have a lot of eyes on it. And he's betting against many eyes and many investors and many analysts out there. Now, Burry likely believes that there's going to be growth deceleration in the capital intensity that is going to fall. He makes some commentary points to slower growth in cloud or AI infrastructure, and this is going to have a huge capital expenditure burden across the entire ecosystem for both of the companies here. The arguments that you've built in your gains are eternal growth. If you are owning this company, do you think that this company can grow forever? Realistically, it's very difficult for a company to grow indefinitely at extreme rates that these companies have been growing at, NVIDIA and Palantir. And any hiccup can trigger a sharp drop. We saw Palantir announce earnings recently, and it didn't seem that the stock really performed that well. It was at $206 and now it's trading at $187. So just by being priced to perfection, there is a reason for investors to not want to throw the farm on shares or buying call options. It makes sense that you might want to hedge your bets against owning a largely valued company like this, an extremely high valuation company, and really just place your hedges. In Michael Burry's case, his hedge is actually his entire bet, right? He is trying to do something called contrarian timing. Burry is applying his familiar playbook here, a spot of overheated trends, positioning ahead of reversion. His trade resonates really with his prior big short mindset. He's really calling the top here. And this is something that he is doing with high portfolio concentration. He has high conviction that by allocating 80% of his short exposure to two stocks out there, he's signaling he's not just hedging, he is committing. This is the kind of conviction that creates market attention, which is why everybody is looking at where Michael Burry is placing his bets. Now, before you jump in and mimic exactly what Michael Burry is doing, let's have some real talk. Shorting or buying deep out of the money puts is extremely risky, and here's why. You have a limited time window, one, where your puts have expiration dates. If you're not getting a far out date, you don't even know when the stock is going to drop. You are on a time limit whether you're going to be paid or lose all of the money that you put into that put option. Now, there's also crowded trade risks. If too many people expect the same decline, the market can actually move slower, and the opposite can actually happen for a while. There's just the inverse relation to how the stock might trade. Now, growth might actually just justify these valuations here for these companies. Some might argue that NVIDIA and Palantir have strong tailwinds for AI and government contracts, or Palantir's CEO is one of the best out there. But that is going to be one of the risks that you go into owning any of these big names. The valuation is going to play a huge role where investors have to look at it and say, is this worth the price that I'm paying today? And can they grow at these rates for a while, for the future, for the next 5 or 10 years? And of course, there might be public filings laggings here where we're looking at the 13F today, but we actually don't know what Michael Burry is actually doing day to day. He could have sold out in the past hour or in the past day, or he will sell out in the next week. We just don't know now because we have to wait for these reports to come out. Now, your risk tolerance really matters, and I'm not really managing billions of dollars like Scion Capital. Even if you believe the thesis, managing size, diversification, or worst case, the losses that could potentially happen here. And now here's how this translates to my investing philosophy, my personal finance mindset here. I view Burry's bet as a do not do exactly as he does trade. It is information. He is saying that he believes this is a big part of being part of the markets, and you're going to have overvaluations and undervaluations, and he truly believes that we are in an overvaluation market. Now, if you are heavily exposed to AI stocks directly or through ETFs, then it might be a prompt check. Are these companies that you own within good valuations? Are they overly stretched? Are you paying too much for their earnings? Don't go wild. For most people, there is shorting or there is buying put options, and that is speculation. You are essentially trying to time the market, the direction in which it will go to try to make a profit. Now, this is not so much investing. This is more of a risk where you're buying companies and you actually don't know where that's going to go. I think I prefer the actual standpoint of buying companies, holding the shares for a long amount of time, and letting those companies prove themselves rather than trying to time price action of where a stock is going to go. And as somebody who's pretty comfortable with Excel or modeling, maybe it might be good for you and I to both build a model and see what happens with AI growth. Is it going to slow 50%? Is it going to slow 30%? Is it going to increase? This is going to matter for the growth rates of the company. So that would be interesting to see. And most importantly, just make sure that your core is diversified. If you have high conviction trades like Burry and you have a big conviction in a play, make sure that your main portfolio doesn't exist of all of these entire risks that you're going to take on. You want to make sure that you're setting yourself up really well for the long term, and any of these short-term timings or bets or hedges are going to be a smaller position in your portfolio. So thank you so much for watching. And if you guys enjoyed this and Michael Burry's latest move and you want just more stock content, anything with the stocks, stock market content alone, make sure that you guys are subscribing to the channel, because I am breaking down investing for you and I'll drop in the description down below where you can find all of my stuff, my content. And if you guys want to see a model, a breakdown, a template, let me know. I can create that and give that out to you guys. So drop a comment. Are you guys riding along with Michael Burry's AI short? Do you believe that he is seeing an opportunity, or do you think he's totally off because he's called the last 30 of the last 2 recessions? So let me know. Until next time, keep analyzing, keep investing. Thank you guys so much for watching. Peace out. See you in the next one.